Good day, everybody. Garrett Moore here. Wanted to talk about what I consider to be the colossal investing mistake, because I think a lot of people are getting ready to make it if they haven't already. We've all heard the advice, don't panic. Frankly, the lower the market goes, the more difficult it is to actually take that advice, and the crazier it sounds. So instead of me sitting here preaching it further, let's talk about why that might be the case by looking back through history. We're going to look at two identical investors, Nellie and Eddie. They're both going to start out with a portfolio of $1 million that is structured the exact same way with half stocks and half bonds. We're going to start looking at this scenario in October of 2007. That just so happened to be right before the start of the financial crisis and the resulting Great Recession and the stock market collapse. We're going to fast forward to March of 2009. That just so happened to be the bottom of the US stock market, but of course nobody knew it at the time. Being that they were both in identical portfolios, they suffered the same exact losses and were sitting at $797,000. But this is where their stories are going to diverge. Nellie is going to sell. He's going to say, I can't take this anymore. I'm petrified. I can't sleep at night. I'm watching my life savings dwindle. I'm out. Sell my investments. I'm going to cash. Eddie, on the other hand, is going to do absolutely nothing. He's just going to hold on. We're going to fast forward to March of 2020, present day. So this does, of course, include the most recent stock market decline that we're seeing. Being that Nellie went to cash, his account value hasn't changed. He's still at $797,000. Didn't go up, didn't go down. Take a second and think about where you think Eddie might be at, being that he did absolutely nothing. Got a figure in mind? You ready? $2.2 million. Think about how drastically different your life would look if you followed Nellie's path versus if you followed Eddie's path. Obviously, Eddie's path was the optimal one, panned out much better for him. Think about how many dreams Eddie's going to be able to fulfill for he and his family right now. Think about all the family, friends, and charities that he's going to be able to help with that kind of money. Obviously, there is absolutely no guarantee that this pans out in the same exact fashion. But I can tell you that this scenario has panned out like this countless times before. I think Morgan Housel really nails it on this one. The majority of your lifetime investment returns will be determined by decisions that take place during a small minority of the time. This is one of those times. As always, I'm here for you if you want to chat. You can call me, text me, email me. Appreciate your time and I appreciate y'all. Thanks a lot. Bye-bye.